Trigger leads. What the heck is a trigger lead, and what does it mean to me as a consumer? What does it mean to your realtor? What does it mean to your lender? Is it a good thing? Is it a bad thing? And should they go away? So let me explain. A trigger lead is anything that you do related to your credit that your credit bureau, Equifax, Experian, and TransUnion, the credit bureaus can sell information to companies, to banks, to financial institutions based on something you did called a trigger. So it's a lead. They're selling your information to say, hey, this person just inquired about buying a car. Well, gosh, if you inquire about buying a car, then a car loan bank would want to know that so that they can reach out to you and give you an offer about buying a car. Maybe you just moved, and so you've got, or you just, I don't know, something. I mean, I'm trying to think of other things other than mortgage. There could be something about, hey, you just paid off a credit card and closed the account. Well, that might mean that you're ripe for new credit cards. Matter of fact, here's a good trigger. You just filed a bankruptcy. Now, why would a bankruptcy be a good trigger? Because there are credit card companies that charge super high interest rates that specifically target people that just came out of bankruptcy. Why? Because you can't bankrupt them. Once you've gone bankrupt, you can't immediately go bankrupt again. So you have to pay them back. So they get a trigger that says, hey, anytime the credit agency finds out that you filed bankruptcy and your bankruptcy is completed, I want you to notify me, and I'm going to go after that person to offer them some credit. That's called a trigger lead. There's a trigger, something that happened that turns into a lead for a financial institution. Now, how does that apply to mortgages? Super simple. Whenever you apply for a mortgage right now and I pull your credit, the 3 credit agencies sell your information to any bank, any mortgage company that wants it. Now, there's a lot of mortgage originators like myself who we get our business through relationship. I get my business through my relationships with my real estate agents that trust me and they tell their clients to trust me. I get my business from business people who trust me. I get my business from YouTube, from people listening to me, believing that I understand what I'm doing and I'm good at what I do, and that they want to trust me to help guide them and take great care of them. That's how I get my business. But a lot of other mortgage companies don't go that route. Instead, they say, well, gosh, isn't it easier to just fish in the pond where the fish are jumping right out of the water and into my boat? Because why should I go after the general population when I can focus my efforts on people who have already raised their hand and said, hey, I'm buying a home? And so there is a problem. When I pull your credit, you end up having your information sold to tens to hundreds of companies, and your phone and your email and your text message is bombarded for 2 to 14 days. Because these companies are going to do whatever they can to convince you that they can do something that I can't do. Now, this isn't self-serving about me. It does impact me, but it's about the industry. And it's about choice is good. Having the ability to choose is absolutely important. And everybody that chooses me, I don't mislead you. I don't want to force you to use me under any false pretext. But the fact is, you had a choice to use me, and you took a recommendation, or you did your own due diligence and you chose me. These companies are trying to prey on the fact that you're at the last minute, you're right now about to go into contract, you're writing offers, and they're going to tell you whatever you need to hear in order to decide to use them. And the federal government has realized this is a problem. There is a bill in the Senate that was just passed through the Senate. Doesn't mean that it's going to end up going, or the House, whatever. That doesn't mean that it is going to become a law, but it's proposed to ban trigger leads for mortgages. What does that mean? Well, what it means is that when you go to buy a house, when you have your credit pulled, you're not going to be bombarded by hundreds of phone calls, voicemails, text messages, and emails trying to get somebody to say, oh, by the way, yeah, you know that you're working with John King at Summit Funding. They use our names. They make you think they're one of us, and it's very, very misleading. And so that bill will decrease the friction that is caused with these trigger leads. Honestly, there's opportunity for you to shop and compare. You don't need to have 100 people calling you in a 24-hour period in order to be able to shop and compare. And it's impossible to know who to trust when you're getting bombarded with inbound phone calls. So trigger leads to me are not a good thing. And I'm hopeful that this passes and that it becomes a law so that my clients, so that you don't get bombarded with these issues.